This show is part of OnePlace, a daily network of focused briefings across the stories people follow most.
Welcome to today's roundup. We are diving into the biggest headlines in tech, finance, and global news to keep you informed and ahead of the curve as the week begins.
Elon Musk and Sam Altman face off in court.
A veteran engineer quits Google over AI pressure.
Gas prices surge past $4 a gallon.
Discarded vapes are causing fires at recycling plants.
Counterfeit flea treatments are endangering family pets.
A Qantas passenger is banned after biting crew.
Geopolitical tensions rattle the Indian stock market.
Jerome Powell leaves a complex legacy at the Fed.
Starting with the tech trial, the legal battle between Elon Musk and OpenAI has reached a critical juncture as a 9-person jury prepares to deliberate in Oakland. Musk is alleging that Sam Altman and Greg Brockman essentially stole a charity by pivoting OpenAI from its original nonprofit mission to a for-profit powerhouse. This trial has been an incredible window into the egos and internal friction of Silicon Valley's elite. We've seen private emails, diary entries, and testimony from heavy hitters like Microsoft's Satya Nadella. Musk's core argument is that he was swindled into providing early funding under the guise of a humanitarian mission, only to see the company restructured for personal gain. It is a high-stakes drama that pits the world's richest man against the leaders of the AI revolution, highlighting a deep-seated bitterness that has been brewing for years between these former partners.
OpenAI's defense has been equally aggressive, painting Musk as a sore loser who is simply upset that he lost the AI race. Their attorneys argue that Musk was fully aware of the plans to create a for-profit arm and even tried to take total control of the company himself back in 2018. When that failed, he left in a huff to start his own competitor, xAI. They maintain that the for-profit entity is still overseen by a nonprofit board, making it one of the most well-resourced charitable structures in existence. The jury has to decide if there was a breach of charitable trust or unjust enrichment. Regardless of the verdict, the trial has exposed the messy reality of how these massive tech entities are formed, showing that even the most visionary leaders are susceptible to very human conflicts over power and money.
Next up, the pressure of the AI revolution isn't just felt in courtrooms, it's also changing the lives of long-time employees. Matt Lowry, a veteran engineer who spent 18 years at Google, recently shared his story of why he decided to quit at age 55. Lowry joined Google in 2006, when the culture was all about engineering freedom and the excitement of building from scratch. However, by 2024, he felt the company was forcing AI adoption too aggressively. He struggled with the shift toward using AI for coding, feeling that it took the joy out of his craft. For him, it felt like he was just fixing someone else's work rather than creating his own solutions. This led to a feeling that he had aged out of the company, as younger colleagues seemed to embrace the new tools with much less skepticism than he could muster.
It is a fascinating look at the human side of technological shifts. Lowry eventually retired early in late 2025, but his perspective on AI actually evolved once he left the corporate environment. Without the pressure of a job, he began experimenting with AI for personal projects, like using Google's Gemini to help plan trips to World Cup games. He discovered that when he wasn't forced to use it, AI actually became a helpful productivity tool. His story highlights a broader trend in the workforce, where experienced professionals are grappling with the rapid pace of change. While some see AI as a threat to their professional identity, Lowry's experience suggests that the friction might be more about the implementation and the pressure of the workplace rather than the technology itself. It's a reminder that even the most seasoned experts need space to adapt.
Now let's shift to American drivers are feeling a significant pinch at the pump as gas prices have surged across the country. Since late February, the national average has jumped from under $3 to over $4 a gallon. This spike is being driven by a combination of seasonal shifts and volatile international markets. For instance, the transition to more expensive summer fuel blends and refinery outages in the Midwest have tightened the domestic supply. On the global stage, tensions in the Strait of Hormuz are causing major concerns. This narrow waterway carries about 20% of the world's oil, and any threat of a blockade sends ripples through the market. Even though the United States is currently the world's leading oil producer, we aren't immune to these price hikes because oil is a globally traded commodity, and domestic producers will sell to the highest bidder on the international market.
The regional differences are quite stark, as shown in recent interactive maps. California has been hit the hardest, with prices topping $6 a gallon in some areas. Meanwhile, states like Oklahoma and Kansas have managed to keep their averages lower, though they are still seeing significant increases compared to last year. Experts like Patrick DeHaan from GasBuddy warn that these elevated prices could persist for months. There is a huge range of uncertainty for the summer, with predictions for the national average swinging anywhere between $3.50 and $5.50 a gallon. It really underscores the reality of capitalism in the energy sector. Just because we produce the oil doesn't mean we get a discount if the rest of the world is willing to pay more. For many households, this is a major budget concern that shows no immediate signs of easing up.
Moving on to recycling. In the UK, a massive environmental and safety crisis is unfolding due to the sheer volume of discarded vapes. Despite a ban on single-use vapes that went into effect last year, over 6 million of these devices are still being thrown away every single week. This is putting an incredible strain on recycling facilities like the Suez plant near Birmingham. Workers there have the dangerous task of manually dismantling these devices. They have to use hammers to smash them open and pry out the lithium-ion batteries. The problem is that when these batteries are crushed or damaged during the waste collection process, they often ignite. In 2025 alone, there were nearly 700 fires at Suez sites, and the vast majority were linked to vapes and batteries. It's a hidden danger that many consumers simply don't realize when they toss a vape into a standard bin.
The financial impact is just as staggering as the safety risk. Industry experts estimate that around £1 billion a year needs to be spent across the sector to manage this issue. Waste sites are now considered high-risk facilities by insurers because fires have become so prevalent. The core of the problem is a lack of public awareness. Many people think they are doing the right thing by putting vapes in recycling, but they actually require specialized electrical recycling points. Dr. Adam Reed from Suez points out that the perception of these items as throwaway persists despite the ban. The sugary scent of the vape liquid might fill the air at the sorting station, but the reality is a grim struggle against a tide of hazardous electronic waste. It's a clear sign that policy bans alone aren't enough, without a massive shift in how we handle disposal.
Next, a warning for pet owners need to be extremely cautious when looking for deals on medication online. A dangerous gray market has emerged, where counterfeit flea treatments are being sold at a fraction of the normal price. These fakes often look identical to well-known brands like Frontline, using stock photos and professional-looking packaging. However, the contents are often toxic. The Veterinary Medicines Directorate in the UK has warned that these products can contain harmful pesticides that lead to vomiting, seizures, and even death in cats and dogs. In one heartbreaking case, a cat required extensive surgery after an owner unknowingly applied a fake treatment. The lure of saving 10 or 15 pounds is understandable, but the risk is a massive vet bill or the loss of a family member. These unregulated sellers often use social media or eBay to find victims, making it hard to track them down.
There are some red flags to look out for if you are buying pet meds online. Counterfeiters often insist on payment via wire transfer to avoid credit card chargebacks. When the product arrives, you should check for the official VMD logo and look closely for spelling mistakes or blurred graphics on the packaging. Sometimes the instructions are in a foreign language, which is a major warning sign. Vet Charlotte Innes, who founded an online pharmacy, notes that the best-case scenario is simply wasting your money on an ineffective product. But the worst case is avoidable suffering for your pet. Since the VMD issued an alert last year, reports of these fakes have increased, leading to a crackdown on several online retailers. It is a reminder that if a price seems too good to be true, especially for medicine, it almost certainly is a dangerous gamble.
Now to airline news. A Qantas flight from Melbourne to Dallas had to make an emergency diversion to Tahiti after a passenger allegedly bit a flight attendant. The incident occurred about 7 hours into the long-haul journey, forcing the crew to land in Papeete to deal with the disruptive individual. Witnesses and footage from the flight show a man in a heated exchange with the crew, appearing intoxicated and slurring his words. He reportedly became aggressive when asked to move to the back of the plane, even telling attendants he just wanted to go outside for a cigarette. Other passengers had to step in to help the crew restrain him during the assault. Qantas has since issued a lifetime ban for the man, covering both Qantas and Jetstar flights, stating they have zero tolerance for such threatening behavior. The flight eventually resumed, but the disruption was a major ordeal for everyone on board.
This is part of a worrying trend of air rage incidents in the region. Just last month, another man was charged after a flight from Canberra to Perth, where he also allegedly tried to bite a passenger who was helping the crew restrain him. In that case, the individual faced 3 counts of assault, which can carry a penalty of up to 14 years in prison. Authorities are emphasizing that aggressive behavior in the confined space of an aircraft is particularly dangerous and will be met with the full force of the law. The Qantas spokesperson reiterated that the safety of customers and crew is the top priority. It's a stark reminder of how one person's actions can jeopardize the safety and travel plans of hundreds of people, leading to massive costs for the airline and severe legal consequences for the perpetrator.
Turning to global markets. The Indian stock market is facing a period of intense volatility as benchmark indices like the Sensex and Nifty 50 ended their winning streaks last Friday. Investors are reacting to a perfect storm of negative triggers, including a sharp rise in crude oil prices and the rupee hitting a record low against the US dollar. Much of the anxiety stems from the ongoing conflict between the US and Iran. Markets are extremely sensitive to any news regarding the Strait of Hormuz, as any disruption there could devastate global energy supply chains. Analysts are warning that the coming week will be heavily headline-driven. If there is a diplomatic breakthrough, we could see a relief rally, but any escalation will likely drive investors towards safer assets. The deadlock remains unresolved, and the rhetoric from leaders like Donald Trump has only added to the sense of uncertainty for global traders.
Adding to the complexity, oil prices surged over 3% recently after comments from both U.S. and Iranian officials dampened hopes for a quick peace agreement. Brent crude is now hovering near $109 per barrel. While there is some positive news with Israel and Lebanon extending their ceasefire, the broader West Asia region remains a tinderbox with ongoing clashes between Israel and Hezbollah. For the Indian market, which is highly dependent on energy imports, these geopolitical shifts are critical. CEO Panmudi R of Enrich Money noted that the mood remains cautious as investors weigh the risk of prolonged disruption against the hope for a diplomatic resolution. It is a reminder of how interconnected global politics and local stock markets have become, where a single statement from a foreign leader can wipe out gains for thousands of individual investors in Mumbai.
Finally, the Fed's legacy. As Jerome Powell prepares to step down from the Federal Reserve, analysts are grading his 8-year tenure, and the results are a mixed bag. For stock market investors, the Powell era was a massive success. If you had invested $10,000 in an S&P 500 fund on his first day in 2018, that investment would have more than tripled to over $32,000 today. This growth was fueled by the explosion of megacap tech stocks and the AI boom. However, if you measure success in terms of gold, the story changes. Gold actually outperformed the S&P 500 over the same period, suggesting that in real terms, the stock gains might be less impressive than they appear. Powell oversaw the Fed during a once-in-a-century pandemic and the biggest inflation surge in 40 years, making his time in office one of the most turbulent in the central bank's history.
While stock investors cheered, those in fixed-income markets didn't fare nearly as well. A $10,000 bond investment grew very little during Powell's term, barely keeping pace with cash equivalents. The massive expansion of the Fed's balance sheet, essentially printing money to provide liquidity, is often cited as the driver for rising asset prices, but it also contributed to the inflation that peaked at 9% in 2022. Powell famously labeled that inflation transitory, a term that has since been heavily criticized. On the other hand, he is praised for his staunch defense of the Fed's independence against political pressure. As Kevin Warsh takes over, he inherits a market at record highs, but also a legacy of decreased affordability for the average person. It's a complicated record that shows how the Fed's policies can create winners in the stock market while leaving others struggling with the rising cost of living.
That wraps up our briefing for today. Thank you for joining us as we covered these essential stories.
Be sure to follow us for your next daily update. We will see you back here tomorrow with more news.